What is going on, everybody? This is Jack from the Trading Tribe. Thank you so much for tuning in again. Today we are going to go through gap downs, how to spot gap downs in the market, as well as how to capitalize on gap downs, especially if they continue with the gap. Today, like always, if you could, please subscribe and like this video or comment if you have any questions. I really love seeing that because that gives me some encouragement in continuing to make more videos each week for you guys. But again, thank you so much for tuning in. Today we will focus again on the futures market. I think it's always good to show you guys actual trades that I'm taking so that it's as realistic as possible. And like we've mentioned in prior videos on the channel, futures do shut down Friday nights to Sunday nights. So typically that's where the best gaps can emerge because that is a 2-day close period. Same with stocks, right? Stocks close every day, so they can gap a little bit differently, but futures tend to have their biggest gaps over the weekend because that's where a lot of traders have to stop trading, and all of those orders can either increase demand or decrease demand depending on where the bias currently is. So if we look, this was a little while ago, but this was December 2021, the first weekend of December. It closed around 4.1 for natural gas, or in this general zone. At the very end of the day, it was at about 4.1. And then on Sunday night, when the market opened back up, you can see a just massive drop down to this general area of about 3.87. So this is the first thing to understand, right? When there is a big gap like this, and in this case, this was a 200 tick gap. So that shows that there are some really big sellers in the market, and there's either big banks or big hedge funds shorting this instrument, or there were just a lot of market orders ready to fill Sunday night once the market opened. So whenever there is a huge change in demand or supply causing a gap down or a gap up, this is really important to understand. This can really be used to leverage your trading that next day because we already see a huge shorting bias based on just the opening price. Then if we zoom into the day, right, this opening level right here at that 3.86 level and the low were the two main levels of the day, right? It's typically that high that you want to watch for a gap down, because if it breaks out of that level and starts uptrending, then the gap can get closed. In this case, that gap opening ended up continuing to be the ceiling, and that's typically what you want to see, because then that means people are still shorting a ton and are still protecting that short bias. So once it came back down to that floor that we had already marked down because of these previous floor confirmations, it broke the floor. And again, these breakdown retests are my favorite strategies because typically in futures, these key levels can act as support and resistance the entire day. So if you notice, this was the floor multiple times. The second it was not the floor anymore and it was broken right about at 7 o'clock Central, this created a new minor low, right? When it hits a low one time, I call that a minor low because it still needs to obviously prove itself as a level, but you can see this general area was the new low. So when it comes up here, this is a really good short opportunity because it was a gap down. It's still downtrending and making new levels, and you are getting in around a key level. So on this second retest up here, this is actually where I ended up getting in on this trade. But again, right, it was an extremely safe scalp almost because it was only a 20-minute trade to make over $500 per contract. In this case, if you sold it perfectly, you would have made about $600. I think I sold a little bit early based on prior levels at around 500. You can also, what's cool about this is you can also use this as a trend trade. And if you had a little bit more confirmation, maybe you did have the strength to hold it a little bit longer and make up to $1,000 per contract. So it really does kind of depend on what type of trader you are, but this is what can be really strong with gaps. you can get the direction and the bias before the market even opens. And in this case, right, we just spotted a key level to risk off of. Our stop loss for the short would have been somewhere around here, and we never were even in the red, right? If you got in based on key levels, which I'm recommending all of you guys do, putting your stops outside of those key levels and your target based on the past, this is an extremely easy way to trade and an extremely quick way to trade because, again, the market moves from price level to price level. So getting in with those trends and with those channels is typically the safest way to trade. And you can see it did the same thing later in the day when it ended up breaking that new level. It came up and retested that break again, which would have been a perfect time to short again and make another $600 in less than an hour. So these breakdown retests are offering amazing shorts in the market, and this is how I typically use gap downs to aid in my day trading. Thank you guys so much for tuning in for today's session. We will see you next time.